Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well this morning. We are starting to see a lot more normal price action, normalization. Look, it's not a matter of trends necessarily. What we've been seeing is far better follow through. There's a couple things to continue to monitor as we come out of a rather strange month. And that is the continued strength of the S&P above the anchored VWAP for the year. Also the NASDAQ, right, doing the same thing. We're actually looking at possibly the first green candle in the NASDAQ. So this green candle is not a traditional Japanese candlestick color. This has to do with where we are in relation to momentum, trend, participation. And you can see both those things are starting to come into focus in these two broader averages. You know, the S&P being sort of an amalgamation of the Dow and the Nas, right? It's got some of the weighting the Dow would have, financials, healthcare, energy. And then it's got this overwhelming, massive influence from the NASDAQ, heavily weighted names, the tech names. Again, both are plotting green candles this morning. And what continues to happen, accompanying all this, what continues to happen, as you can see here, is that if there's anywhere we want to see red candles, it's in the VIX. We want to see the VIX continue to come back into the normal zone. What's the normal zone? Well, below 16, but above 13. So that sweet spot is exactly where we sit, between 13 and 15. And this is a great place for follow through. So much like we wanted the S&P to move higher off key levels, we want to see the NASDAQ off those as well. Let's talk about some pre-market levels because, you know, look, the first thing we're going to deal with in many ways is the sentiment that we inherited from earlier in the morning. Now, how early, right? We can take a look at the Asian close to start. And the Asian close is 4 a.m. Eastern. Now, yes, during all the daylight saving shifts, things get a little wonky, but for the most part, as we operate through the year, 4 a.m. is that pre-market marker. All right, so then now what? Well, let's go to the S&P, for example, not the VIX here. Although it's great to see the VIX drop intraday. But let's take a look at the S&P. Where have we been since 4 a.m.? And you can see a lot of the post-Asia reaction moving higher. And then things kind of go into slop and chop. And that's not unusual because ultimately what we want to remember is there's a 3-hour space, 3-hour gap between where the Asian market closes, but the European and the UK markets are open. And then we're waiting on the first cup of coffee in the US market, which happens at, of course, cup of coffee, which happens at 7 a.m. Now, why would I say 7 a.m.? I mean, who's at the office? Well, what we're doing is going back to the data. Where are we in relation to volume and volatility? So if we have a 3-hour span of just sort of meandering, when does volume and volatility sort of return and let us know that there's a little bit more participation? And that's right around 7. So for me, that next opinion, and in this case, it's echoing what we saw at 4 a.m., is right around 7 a.m. Now, there are other things that we can mark on this intraday chart. By the way, this is a 5-minute chart, as you can see here. What else can I mark to understand pre-market, right? Now, remember, pre-market has lower volume compared to what's going to happen at 9:30. Even in the S&P and the NASDAQ, we'll have a lower volume. So the opinion is less. But there's a few things that we can mark on this chart. We can look at pre-market highs and lows. We can look at ranges that were established before the bell rang. And those are all things that will help us prepare for the open. Probably the most important thing, and I get this asked a lot, is Rog, if you're trading the futures, and I still do, but if you're trading the futures, how does that map to something like SPY? How does that map to even something that I do not trade, but you can map it the same way, the SPX? Look, there are numerous ways to trade the S&P. The S&P E-mini, the S&P E-micro, the SPY ETF, the SPX, and then the smaller counterpart, the XSP. All those are going to get a bit of a sort of head start, if you will, by looking at the 23 our version of the S&P. So regardless of which one of those, 5 symbols we just talked about, we can look at the S&P futures, the ES, so that what are we getting with the ES? We're already getting lots of participation, right? This is truly nearly a 24-hour market. So there's already opinion, there's already a good amount of size where Europe has traded, well, Asia's traded it, Europe's traded it, UK's traded it, and that early morning in the US is already active. So it gives us a little bit of a jump start on the morning. So by looking at some of these pre-market levels, different pre-market zones, if you will, high to low, which is one thing we can look at: overnight highs, overnight lows. We can look at the value area high to value area low. We can look at the point of control since 7 a.m. So realize there's lots of things we can take away from that pre-market. And these are all easier to do if you're looking at the ES. So that's the first place I'm going to start. I'll do this with the ES and Q, Y, M, RTY, ZB, GC, CL. We can do this with the 6E, the euro, which is a fantastic way to look at the dollar. So there's lots of ways to get information from the pre-market. There's nothing magical about it. It's just a matter of saying, hey, where have we been? And are we inheriting any kind of trend? Now remember this, gang. All of us can draw in support and resistance. All of us can find different levels of support and resistance on any chart, right? And give or take, there's hundreds of us here. Give or take, all of us are going to draw probably mostly the same levels. So it's not the support and resistance alone that differentiates, well, frankly, trading success versus a lack of trading success. It's what we do at those levels, right? So this morning, we are inheriting an uptrend. Where are my drawing tools? This morning, we are inheriting an uptrend. So remember, there's nothing magical about the pre-market. Just make sure you're doing it on the right chart. And make sure you're looking at some very simple levels that all of us can do, right? Well, the ones that I've just discussed. And so probably the most important thing is the context of the moves. Are we above or below the pre-market close? Do we have a 5-minute trend? These are just very simple, basic things we can do to start off the morning. And this is how we start off the morning every morning, Monday through Friday anyway, in the Sector Secrets Mastery. So there's some really easy things that we can look at. All right. So the next thing we're going to take a peek at is the economic calendar. And if you have any questions, feel free to type them on in, please, and we'll tackle them first come, first serve. And where is my calendar? There we go. Economic calendar. What are we waiting for today? Take a peek. Is there much by way of U.S. data? There really isn't. This is a pretty open economic calendar. And that's not that unusual the week after non-farm to have a pretty quiet economic calendar. Now, that does not negate the fact that we have still another, I believe, 6 FOMC speakers this week. We had Barkin and Williams yesterday. It's nice and quiet today. We go into tomorrow where we have FOMC member Cook and on and on. So make sure you're taking a look at an economic calendar, whether that be Forex Factory here, which is one of my favorites, or maybe it's Trading Economics, maybe it's Econo Day, what have you, right? So that is where we start in the morning. Get that pre-market read, understand what we're going to be dealing with at the bell. Don't start looking, you don't have to start looking at what's happening at 9:30. You can get a pretty good feel for the kind of movement we've seen if you understand the different waves of participation from the different financial centers coming in and out of, say, for example, the S&P or the euro or the bond market. All right, that being said, let's go ahead and jump into our questions. And as always, you can check out what we're doing over at sectorsecrets.com. All right, first question coming from Tommy this morning. Can we take a look at MARA? Of course. So let's do this. So I'm going to move the 5-minute aside because I really won't know what I'm going to be doing as a day trader until after the bell, but we get some nice pre-market reads. Really easy, right? MARA. So what's the structure of MARA, right? That's the first place we want to start. And I don't see a terrific edge in terms of follow through in MARA yet, but ultimately the 200 propulsion, let me show you this right here. Look at how many times we've interacted with this level. And it's amazing that if we can bounce off it, or when the bids aren't there and we sell off to it, we get rejected around it. So we're actually getting back above it with the first green candle that we've seen in quite some time, not since what, the end of February, beginning of March. So this is a significant move, but it's a first move. Tommy, I think the biggest challenge traders will have is not chasing momentum, right? It had a nice day, but it had a nice day on, as you can see here, April 23rd as well, meaning it moved higher. It's the context of where it's moving. Is it moving higher through some sort of important level? And in this case, I agree. It's making its way above the 200 green candle. I would start to get marginally more bullish in Mara. But here's what I would always say. If what we trade is more important than how we trade it, which I firmly believe is to be true, if what we trade is more important than how we trade it, then I've got to ask myself, is there anywhere else, either in the area that Mara trades in, what are other stocks in the area, the sector, the group that Mara trades in that might have a better chance of follow through, that might have a more established bullish or bearish view? And then which direction are we looking to trade that name in? All right, next up is iPod asks, am I going to trade? How are you going to trade Disney with the pullback in an uptrend? All right, let's take a look. So daily time frame. This is not an uptrend on Disney for me. So is it generally bullish? It's above the VWAP for the year. It's finally printing a neutral candle. That was yesterday. It's shaken off a pretty long period through middle of April to the beginning of May, where it was rather bearish chop. We had a very brief visit to a downtrend. So this is not an uptrend for me. However, it would generally be considered at this point at least neutral. And I wouldn't want to be a bear. To your point, I would no longer want to be bearish, really. So the question is, what, if anything, would I do in Disney? And this kind of goes back to the same conversation I just had with Tommy, which is if I'm looking at Disney, I'm going to look at the XLC. Am I looking at XLC, which I know is kind of a hideous looking chart, but by looking at XLC, what I'm able to deduce is there's a lot of other stocks in communication. And the question we always have to ask before do we trade this symbol or that symbol is this the best representation of what it is I want to do, whether that's being a bear or a bull? And I'd have to say Disney probably isn't that. So I simply wouldn't trade Disney yet. Let's keep it on the radar. It's transitioned from red to yellow. It still needs to prove itself to me for a buy, and it would probably still be marginally bearish to me in terms of where it sits right now. All right. Next up is Paul asks, I'm liking GDLC. Okay, I'm not familiar with GDLC. GDLC, this is grayscale. Okay. So grayscale, I would still be bearish in. And I don't even know what this is, Paul. There's no options on this, but I would be marginally bearish on GDLC. All right, next up is Silent Flame asks, can I do a tutorial on VWAP? Yeah, maybe sometime in the future I'll head on over to my YouTube channel at Raghee Horner and we can do a quick one, but I don't have one on my channel right now. But for now, what I would recommend is having at least one anchored. And that's the key, right? If I'm going to do a tutorial, it's going to start with what kind of VWAP do we use? What kind of volume, price-based volume tools do we use? And the key is anchored, right? That's really the key. Regardless of what kind of volume tool you use, whether it's volume profile, whether it's my V-score, whether it's an anchored VWAP, the first question is, where do we anchor it from today, right? All right. Next up is XLE. Still marginally bearish. So here's a really, again, I'm going by the daily time frame at the moment based on the question. So if you have a time frame specific symbol question, let me know what the time frame is. But if I'm looking at XLE, my rules prohibit me from buying anything in a red trend. However, Julian, if I'm looking at XLE and I'm thinking, wow, this could get a boost, then I'm going to take a look at the top weighted names in XLE. And Exxon, I can't buy, but Chevron, I can. So this is what we trade is more important and how we trade it. This watch list building process, gang, is really the key. It doesn't have to be my process, although that's what I teach in the Sector Secrets Mastery, which, by the way, you can check out at sectorsecrets.com. However, the watch list building process is kind of a game of trade this, not that. Oh, here it is. I love this image. Trade this, not that. Y'all remember that book, Eat This, Not That? Can I, without bias, abandon the symbol that I was interested in and say, hey, there might be something better? And better would be defined by structure that leads to follow through, right? So kind of a trade this, not that conversation is really what dominates my watch list building. So XLE gets us to the party, right, Julian? But once we get there, we say, hey, wait a minute. This little corner of the party, CVX, might be really where it's at. Jimmy says Mara has a 1, 2, 3. I love 1, 2, 3 patterns. You all know that. We write about it a lot over at Countdown Trader, which is my blog here. So is there a 1, 2, 3? Yeah, we could definitely look at a 1 here on April 17, the 2 point on April 24, the 3 point on May 1, and at least being a neutral environment with the first green candle. Notice how the breakout, and this is a breakout pattern, by the way. Notice the breakout is through the high of the number 2 point, and this is not uncommon. The automated Darvis that I use, Darvis 2.0 or Darvis 3.0, was broken yesterday. But I'll tell you this, on anything under $20, it will be really important that volume levels are broken. And since the VWAP is still overhead, be really careful there with that 1, 2, 3, because there's still an obstacle, right? There's still an obstacle in the way. While the obstacle is the way, a great book by Ryan Holiday, the obstacle is the way to really get that follow through that we're all looking for. We really need to, in any breakout, we need to break above levels that would represent where selling pressure could be, and that would be around 2180. All right. Okay. Is Tesla bullish above 180? Is Tesla bullish above 180? All right. So if I take a look at Tesla, would it be bullish above 180? So this is the way I would look at it, Smoke. What I would want to see is, clearly I'd like to see it above, call it 187 and a quarter. With green candles, I can't short it. So the only thing I could do is wait for the green candles to meet the gray zone, which is the daily price movement range on this chart, daily price movement range. And if that is where the support would be expected to be from a volatility perspective, from a historical volatility perspective, that'd be a great place to focus on. As far as continuation goes, what are the obstacles? 171.5. I'd have to keep an eye on that. So it really would be bullish above 171. 187.5. All right. That's the way I would look at the tools on my screen. And, look, all the different tools that we keep on our screen, as long as we know, because this is a process that we will use to discern which one of the tools do we care about in a given structure. What is their job? So the more comfortable you are making sure you don't justify a trade with what's on your screen, but rather use the tools in the context of what they're there to tell you, well, we'll always be a little bit better off. So when you have an indicator on your screen, the question is, what is it there to tell me? In the case of the anchored VWAP, it's really there to tell me in a lot of ways if I'm in the bullish or bearish hemisphere. Now, that being said, Tesla's still below the 200, right? So there's still an obstacle way up ahead. However, there's plenty of distance between this first obstacle at the anchored VWAP and this other obstacle at the Darvis, and yet another one at the 200. There's plenty of potential upside if you are bullish, and because the candles are green, that would be what I focus on. But then we got to do the same thing and ask ourselves, of all the things that I could buy in consumer discretionary, which is one of the places that this is actually the sector that Tesla resides in, I'd have to ask myself, is there anything better? This is the trade this, not that. Is there anything better in consumer discretionary, right? And in that case, Amazon would probably be a little bit better in that regard. So when we start with a symbol, kind of work up from a top tier type consideration. What is the index doing that Tesla belongs to? NAS and S&P are bullish. What is the sector? Consumer discretionary is pretty well supported. And what's the best look in that sector, right? And that's the way we'd want to look at it. Just like that, 20 minutes are up. Wow, that flew by. All right, gang. I will see you all tomorrow, same time, same station. Be good to each other. I'll talk with you soon.